what's up, guys? Welcome to the Momentum Trading Lab. Please remember to hit that like and subscribe, and let's get into it. All right, so we have the FOMC red folder event coming up at 2 o'clock. So that's in about an hour and 10 minutes. And then 30 minutes after that is the press conference. So definitely keep an eye out for the volatility that's going to come into the market around 2 and 2:30. All right, let's get into the chart. Let me just quickly clean this up. This is the little trade that I took in the morning session. I'll quickly review it. But I basically bought into that or sold into that fair value gap. I think this was on the 2-minute chart. Let's quickly remove all of this. Okay, so first off, before we go into the nitty gritty and see what happened, go to the 1-hour chart. Okay, so I posted some levels in the Discord this morning as well. So I was looking at this level right here for the ultimate target for the short. And the reason I was looking at that low, because that was a high liquidity low. And we know that's a high liquidity low. If we switch to the regular trading hours, you'll see that this was a low that was formed in the regular trading hours, and it wasn't a high or a low during the overnight session. And as you can see, they came straight to it, reversed, created a bullish little fair value gap, tapped into it, and then started to move away. Switch back to electronic trading hours. This is very useful to look at the regular trading hours as well. You'll be able to spot these opening gaps. You'll see that the price action tends to revert back to these gaps. So how it came right to it and then started to dump towards the sell side liquidity. And then we still have another one here at the top that's not been claimed yet. I'm looking for the Nasdaq to, at some point, to come and reclaim this one. So from the open to the close. So that gap is at 15,610, and the upper end of the gap is at 15,694. Okay, so I'm gonna remove that, switch back to electronic trading hours. Okay, so let's see what happens. So let's quickly identify the 8:30 opening price. So this is what the algorithm refers to. That was your open. Yeah, so then the open was right here. So if you are bearish, the idea is when we get above the 8:30 opening price, you want to be looking for a short. So I missed the initial little imbalance right here that was formed on the 1 minute, I believe. Right there. So that would have been the ideal entry. So this is basically the ICT 2022 model. So you have a high right here. Then you take out the high, but you don't displace above it. You just tap into the liquidity. And then you watch for a market structure shift. So this is the low that you would be watching out for. Get the displacement below the low with the fair value gap right there. They gave you 3 chances to enter right there. And then the ultimate target would have been the sell side liquidity right here at 15,338. So that one I missed. I didn't see the imbalance on the 1 minute. I only saw it after the fact. So I got in on a 2 minute here after it already made a bit of a move. I believe that was on the 2 minute. Yes, it was. Okay, so I was still happy to enter right here because I had a strong conviction that price is gravitating towards this low that we identified, the high liquidity low. And we got the displacement above this low, so a nice break of structure with the fair value gap. Right there. Yeah, so I entered as soon as it entered the box. So I had a bit of heat on the trade, these wicks to the upside, and then it moved down. I sold 2 contracts right there. And then as it moved up, I was a little bit sketched out. I peeled one more off just so that if it goes into my stop, I could still break even. Then it started to move down again. Sold one more, and then I left one runner to go and dig into the liquidity right here. I think my sell was at, let me quickly see, at 340. That was the last one. So the sell side was at 338. So I had it just above the sell side liquidity. Yes. That's where I sold the last one. Then it created another small little imbalance right there that you could have used for entry, and right there as well. I like using the 2-minute on the Nasdaq. It gives pretty good signals for entries. Could have entered right there and then ran it towards the buy side. So why wouldn't you enter short on this one as well? And just because we entered the sell side liquidity, so whenever we dig into the sell side liquidity, we expect price to move back towards the buy side liquidity. Clean some of this up. Okay, so we know we already dug in there, so I'm gonna move this line over there. So that's the new low that we'll be watching out for in the future. We can remove this. Okay, so now we have buy side liquidity building up above these highs right here, these relative equal highs on the 15-minute. And then this looks pretty suspect, these equal highs right here. This is at 15,441. And then I'm also looking at this high right here, 15,467. So this was a high formed during Friday session. And then also these highs. So we have some liquidity built up right here. Also kind of says relative equal highs. So it looks like the draw on liquidity is going to be towards this area, because we have the buy side there, there, over there, and then over there. And then we have, I think this imbalance was on the 1 hour. Yes, we have this imbalance on the 1 hour, and then we still have multiple untouched imbalances. We'll also be able to see this on the 4 hour. So over here we have this imbalance starting at 15,532. The upper end of the gap is at 15,642. And then we also have that opening gap right there. So if you switch back to regular trading hours, that gap that we pulled right at the beginning of the stream. Okay, so bunch of liquidity being built up above these highs, imbalances to the upside. So it seems we could at least now see a move back towards this high after we took the sell side below these relative equal lows. Then the 15-minute, it did displace out of the sell side liquidity. We don't quite have the market structure shift on the 15-minute yet. This was kind of your last high on the 5-minute. We have a high on this candle, and then we have lower highs on either side of the candle. So that is technically a high with the imbalance right there and an imbalance right there. and then they tapped it right into the lower end of this imbalance and then started to move to the upside. This is a bit of a bearish pattern. It looks like that three drives pattern. Quickly have a look at the momentum master. Okay, 15-minute wants to come down a little bit. See if there's any bearish divergences. A little bit of a bearish divergence starting to print on the money flow. So a high and a lower high. And then over here we have a high and a higher high. And then most of the oscillators is getting extended and starting to point to the downside. The stochastics, the RSI, the money flow, the normalized MACD, and the Williams, the strength indicator is also pointing to the downside. Okay, the Optima is also saying that the money is flowing out and is giving you the indication not to go long with this little finger pointing to the downside. Now let's see. So there might be a little scalp to the downside. I'm going to be very picky with the setups for myself this afternoon during the FOMC. I don't want to mess up the trade that I had earlier today. Okay, so that's our market structure shift on the 5-minute. And it's also, we have this, remove that. Right here at this bearish fair value gap on the 5-minute chart. Get a flip from the high to the low. Looks like it's getting rejected right at the equilibrium. Move this to the side. So that's the equilibrium right here on the 0.5 on your Fibonacci. Gonna make that a lighter color. Switch off the extensions. Okay, so it looks like it's getting rejected right here at the equilibrium and this fair value gap. So if we can get displacement that takes out this low, it will be your market structure shift. This one is probably not the best short to take. This will have to be a quick in and out because we have this imbalance that could create a little bounce. Let's see, let's pull a flip from the low to the high right there. Okay, so we have the equilibrium for this impulse to the upside right at the imbalance right here. Okay, so the midpoint of the fair value gap is around the Fibonacci 618. So maybe a quick little 18 to 25 points to scalp. The key thing is the displacement that creates the market structure shift. Have a look here on the Optima again. Here you can see the divergence form as well. You have this high, lower high, high, and a higher high. And it's telling us the money is flying out of the market. The divergences is also visible on the RSI and the money flow indicator. Williams is also printing a divergence, a high and a lower high. I'm gonna go have a quick look at the momentum master light. I haven't I started using this yesterday. Danny added me, so I think this is still kind of in the testing phase, but let's have a look at what we see. You can see that the cloud is starting to curve potentially to the downside, and it's starting to thin out, and it's struggling to get above the baseline moving averages. So there's a couple of bearish indications. So the final confirmation will be is a break below this low with displacement. So you want to see that leg down create a fair value gap. That's going to tell us that there's bearish order flow. And then I would say we just scalp it to the low hanging fruit towards the equilibrium and the Fibonacci 618, which is more or less at the midpoint of this fair value gap. And it's also right at the top of the bullish order block candle right there, if you include the wick. All right, so that's kind of the New York lunchtime session has just ended 6 minutes ago. The kill zone session starts in 24 minutes, and then we have the silver bullet starting in 55 minutes, right at the same time as the FOMC red folder event. Right, have a quick have a look at the higher time frames as well. I just want to make a copy this link for myself because I'm just gonna delete everything right now on this chart so we can analyze the higher term time frames. Alrighty. Okay, let's delete everything. Okay, the momentum master B on the daily looks like the momentum is starting to reset. The money flow in the RSI is kind of still looking a little bit indecisive. Okay, so this is today's candle. We've not yet taken the previous day's high or low. Pretty interesting. So we have the previous day's high. Previous day high. Yeah, previous day low with a bit of a doji candle right now on the daily. Imbalance right there. So the imbalance starts at 15,463. And it also looks like the equilibrium for this leg down will be right in that fair value gap. And so we have the equilibrium more or less in the midpoint of the fair value gap. So it looks like, I mean, the previous day's high is a lot closer than the low right now, and we have the imbalance to the upside. So it seems like we could potentially, during the afternoon, run to the upside. We know on the lower term time frames that we already took out the sell side liquidity, and we know that price moves from sell side to buy side and from buy side to sell side. So it just goes like that and just knocks out the liquidity and then reverses. So I think it's likely we could potentially go towards yesterday's high and maybe towards this imbalance. We can see we are starting to print, technically we are starting to print a low on the daily. So technically a low is whenever you have a 3 candle formation like this, we have a low and a higher low on either side of the candle. So this is exactly what we have right here. So for instance, right here, we had a low with a higher low and a higher low. Got to move to the upside right here as well. Right here as well, but then it failed. And it created a high and dump. But this is, there is some indications that it wants to potentially expand to the upside after this nice move down. All right, so I think the drawn liquidity after we took the sell side this morning is towards the previous day high and this imbalance. So look at the 4 hour. Okay, so here we had those relative equal lows. We took it, started to move to the upside. 4 hour is a little bit indecisive. Momentum is starting to run out. The money flows above the RSI, which is a bearish indication and pointing down, but we still have strength and that rising sun indication. A little bit indecisive. And then, like we mentioned earlier, we have the fair value gap on the 4 hour right in between these three candles. And then we also have that opening gap. This one right here. Okay, so the fair value gap and the opening gap overlaps. So that's kind of a strong indication as well for a draw on liquidity. Let's see, and then also we had a low right here on the 4 hour. Didn't displace below it, so we just tapped into it and then started to move away from it. So that's also a bullish signal. Okay, so now we are back on the 1 hour. Momentum starting to reset. The strength still has a little bit left to go, but like we mentioned, we came for the sell side. We did not displace below this low, which tells me that this was just a liquidity purge of the sell side liquidity. And then after taking the sell side liquidity, we can kind of assume that it's going to start to gravitate towards the buy side liquidity above these highs. And then we have a bunch of imbalances to the upside. We have all of those fair value gaps and opening gaps. The 15 kind of looks like it wants to roll over, like we discussed in the beginning of the stream. Okay, I think what I'm going to be looking for after we did a proper analysis of the higher term time frames, it looks like the draw on liquidity is to the upside and we are coming from sell side. So we want to see a move back to the buy side. But what I'm going to be looking for is, so according to my entry model for me to go long, I want to see some sort of liquidity purge of the sell side. Yeah, so here's a low right here that I'm going to monitor. So if we come below this low and we don't displace below it, so we just tap into it and then start to displace to the upside, that then I have a valid potential trade setup on my hands. Then I will be looking for price action to break these highs. This is still a bullish market structure, even if we just take that. So this will be our breakout structure. I want to see it dig into the sell side, breakout structure, take out a high. I want to see that fair value gap on the 5 minute or lower, so somewhere in between the 5 minute and the 1 minute. That will be your entry. You are looking for a fair value gap in the discount range for this impulse to the upside. Okay, so that's basically what you will be looking for a potential long setup. Just a dip into sell side, displace to the upside, take out this high, that will be your breakout structure. Then we are looking for a fair value gap in the discount leg for this move to the upside. And we want to see the fair value gap on the 5 minute, for the 4, the 3, the 2, or the 1 minute. Okay, so that's what I'm potential setup that I'm looking at. So I'm just gonna add an alert right here for myself and one right here. Okay, so my alerts are set. Okay, that's the potential setup. We know that there's a bunch of imbalances to the upside. We came from sell side. So it looks like the draw on liquidity for the afternoon is going to be to the upside. So that's why I'm looking at this potential setup. So it might kind of, I like this setup is when you have a low. So we know there's liquidity right there, and it's also in this fair value gap. So that could be a strong bouncing point right here. Just dig into the liquidity, into the imbalance, and then potentially that leg up, and then we'll enter around here. And then, so that would be a pretty decent target, those relative equal highs right there. I'm gonna quickly see how many points that is, more or less. If we enter around here, to the relative equal highs is about 66 points. That's pretty decent. All right, and these highs look pretty suspect. They are just too clean. Yeah, so there's a bunch of buy side liquidity pools that we can target. And then this is the 1 hour bearish fair value gap, is that gray box right here. So I would say that would be the target right there, the ultimate target, those equal highs right there. And go on to the 2 minute. Go to the 1 minute. And then I would suggest just keeping an eye on that imbalance. The this is basically the imbalance from this morning for the move down. So this could be a good place to take some partials right here. So peel off a contract or two, then target that area, and then potentially the previous day high as your final target. Alrighty, let's have a look at the dollar index. Okay, so this was pretty interesting. So I was expecting for the dollar to reach for this high over here. If we go to the daily, this high at 105.883. But then this morning I put out an update in the Discord that we broke above this high. So this is a great example of what a liquidity rate looks like. So for this to have continued higher, it needed to take out this high with displacement. So nice move up creates an imbalance. Then there would have been a high likelihood that it would have continued to the upside. But as you can see, they just tapped into it. So they just tapped into the buy side liquidity. And then we got displacement below this low. So there's your imbalance right there. And to me right now, it looks like it's first going to come and visit these lows right here. So these are also relative equal lows. So we can expect the sell side liquidity to be below these lows. And then there's a nice imbalance right there on the 4 hour as well. So it looks like the dollar is drawing to the downside. That's definitely nice displacement below the low. So we could potentially see a retrace back into this area. This fair value gap is not confirmed yet. This candle still has an hour and 40 minutes left, but it definitely looks like it's going to be confirmed. So we could see a retrace back in that area and then continue down to take out the liquidity below these relative lows. Right, so definitely the drawn liquidity looks to be to the downside for the dollar. So that gives me more confidence in the setup right here that we have identified. Wondering that maybe this was the low. Let's see if we displace above this high and we get the imbalance, then the trade is on, and we can enter on a retrace into that box, then ride it to the targets that we discussed, the fair value gap on the 1 minute, gives me the relative equal highs right there and the previous day high. I think that will be some pretty decent targets to achieve by the end of the day. Okay, so have a look at the dollar index, the lower term time frames. You can see how these fair value gaps tend to play out. The important thing is to always wait for the liquidity purge first. So here you can see how equal these highs are. So retail traders would see this as resistance, right? So if they short, there's a high likelihood that they would put their stop losses. Let's get an example. Put their stop losses above these highs like this, right? And then target some low. So you can see they digged into it once, digged into it twice, and then started to displace to the downside. So right at this point, it broke market structure when it took out this low. There was a little imbalance right there. It never came back to this one. Created a low, displaced below that low, created the imbalance. So if we have a closer look at these three candles, there's no overlapping between the low of this candle and the high of that candle. So that area is your fair value gap. Looks like this one just pierced exactly into the mean threshold of the order block and then started to dump again. Created more imbalances. Came right into it, dumped again. So this is kind of my main trading strategy, is waiting for price to go into the liquidity and then displace. So this displacement tells me that the bigger players bought up all of these buy stops, and then we can see that by this bearish order flow that's created in price by creating all of these fair value gaps. And the algorithm is kind of, as I understand it, coded to reprice these imbalances and then continue to its target, which will be the sell side liquidity. So that's why we take advantage of these little retraces into the imbalances and then ride it towards the opposing liquidity. Alrighty, so let's quickly recap the dollar. Dollar looks bearish now. Couldn't displace above the high, so that was just a liquidity purge. Now we can see we are starting to break in a strong bearish market structure on the 4-hour, displaced below this low. There's your imbalance, and then there's a bunch of imbalances on the 1-hour. But more importantly, if it came from buy side, it will very likely move to sell side because of big money shorted over here. Let's just quickly explain this. So if retail traders had their stop losses right there for their short positions, they have to buy, right, to cover their positions. So for the big money to short over here, they need to sell to willing buyers, and those buyers will be right here in the form of those stop losses. So now we know the bigger players went short right here, and now for them to take profit, they need to pair their orders with the sell side liquidity below the lows. So that's why I think it's likely it will gravitate towards these lows. And then in turn, it looks like the Nasdaq and ES will gravitate towards the buy side liquidity and the imbalances that it's formed with this move to the downside. Let's see what the 5-minute is doing. Okay, so now we tapped that high, couldn't displace above it. So that they just knock out the buy side to continue lower. The only way we'll know is if we see displacement below this low. It creates that bearish fair value gap, and then you can enter right there and then just ride it to the opposing liquidity pool, which will be right there. But I still think that the Um, this was probably just kind of idiot boxing, right? So it's just consolidating, inducing liquidity on either side of the range. So I still think that at some point in the afternoon session, they'll dip it into this sell side and then push it to the upside towards the buy side liquidity. Alrighty, a quick look at Bitcoin and then I will be off. Okay, so Bitcoin is still kind of following the projected path. The initial projection last week was a move above the highs, reprice this imbalance and then go towards the sell side. We didn't get that. It displaced above these highs. You could see that imbalance right there and came back into the imbalance, started to move back to the upside. And I believe that they are drawing towards the buy side liquidity at 27,580 more or less. And this high right here, this high is at 28,142. And then we also have this fair value gap right here, still untouched. So it looks like the draw on liquidity for Bitcoin is towards this area. And the upper end of that fair value gap is at 28,483. Alrighty. I think that's it for me. Be safe out there. The FOMC meeting starts in 33 minutes. So definitely expect manipulation in that hour. Well, exactly at 2 o'clock. So a lot of the times what they like to do is just spike it both directions. Um, go back to the Nasdaq. As we mentioned, it's kind of creating this consolidation. So they are likely inducing liquidity on either side of this little range. So right at 2 o'clock, there's high likelihood that they smash it this side, then smash it that side, and then go into the right direction. So they might take it up and then down and then up again. So expect some craziness. So my personal strategy is I'm just gonna observe the price action at 2 o'clock, and then remember we have the press conference at 2:30, so there's going to be volatility at around that time. But what I'm going to be targeting today is the 3 o'clock macro. So there's a algorithmic macro that starts to spool at about 3 o'clock, and that will run towards any smaller time frame untouched liquidity pools. I'm most likely going to be targeting that setup later on, except if we get the solid setup that I discussed earlier, where we take out the low and displace to the upside. But it's kind of tricky with the FOMC meeting in about 30 minutes. So we'll just have to see what the charts present us. Alrighty, so with that being said, thank you guys for everyone that tuned in today. I will probably not be back tomorrow. I've got some other business to attend to, but I will be back on, what is today? Wednesday. So I'll be back on Friday, but I'll do updates in the Discord as I go through my day. So be safe out there, and I'll see you guys in the next one.